Eddie Ghabour, along with Mark Tepper this morning. Great to see you, Eddie. Thanks so much for joining the conversation.
Thank you.
All right, markets
Thank you for
this
having
morning,
me.
we're at the highs of the morning. Check this out. Dow Industrial's now up better than 300 points on the Dow. United Healthcare is a factor. Stock is up big this morning. The S&P 500 right now is also extending into further record territory with a third straight record close yesterday. Despite a hotter than expected PPI number, Intel is also part of this rally. The stock is higher again, as there are reports that the Trump administration could actually take a stake in the chip maker. Stock is up 1.5%. Intel, by the way, declining to comment on the specific report, but a company spokesperson says Intel is deeply committed to supporting President Trump's efforts to strengthen U.S. technology and manufacturing leadership. We look forward to continuing our work with the Trump administration to advance these shared priorities, but we are not going to comment on rumors or speculation. Eddie, what's your reaction to this melt-up in stocks?
We're not surprised. We have a pro-growth economy right now and policy that hasn't even fully gone into the marketplace. And once we get the Fed cooperating with our administration, we think this economy is going to boom over the next 6 to 12 months. And so betting against this market has been the wrong bet, and it's going to continue to prove the bears wrong, in our opinion. I mean, earnings have been fantastic. I think what we will see here right now, we are positioning for rotating into what's going to be doing better over the next 6 to 12 months. We're heading into weak seasonality, so we wouldn't be surprised to see a pullback post options expiration this Friday, and then taking some of that cash we've raised over the last week and deploying it into areas that we think are going to benefit from an economy that's going to start to reaccelerate in the fourth quarter and going into next year. So we think if there's going to be a surprise on the economy, it's going to be to the upside, not to the downside.
So what specifically are the areas that you want to invest? Where are you allocating capital?
So we've recently taken some off the table from some of our tech names that have really done extremely well the last 4 months, and we have started to rotate into some home building and housing stocks. We believe this administration is committed to getting real estate going. When we're going to have a trend of rates going down with Fed policy over the next 6 to 12 months, XHB has been a great way for us to play that. We added that at the end of last month. The other thing we're starting to see catch a bid, it's not been a popular trade, but are small caps. If we get the Fed to start reducing rates and this economy does accelerate, I think you're going to start to see business sentiment on the small cap side really start to increase. And we're going to blow through the 2021 highs. It's a contrarian play, but small caps are not even back to 2021 levels. And so those are two areas that we have added to. And then Apple has been a dog this year. We added that a couple weeks ago. We think some of the dogs of this year will be the winners going into next year. So we're rotating and trying to be forward looking in how we're allocating capital.
All right, and then there's the Fed, Mark. Interest rates this morning are looking like this on the 10-year. Look, we're going back and forth on the 10-year. We're still hanging out at around 4.2% on the 10-year, which is good. We're at 4.29%, though, up 1 basis point right now. We're waiting on some key economic data this morning. We got the July retail sales and import and export prices report in about 45 minutes, 8:30 a.m. Eastern. Economists are expecting a gain for retail sales of 0.5% for the month. After yesterday's PPI report, which was a bit hotter than expected. Mark, your thoughts on the macro story right now?
I was reading Bank of America's report on total card spend, which includes both credit cards and debit cards. And last month, we saw the highest year-over-year increase of 2025. So things have been very good, and as goes the consumer, goes the economy. So these are obviously very important numbers. But what I found most interesting out of that report is that the increase in consumer spending was broad-based. It wasn't just retail. We also saw a huge increase in the highly discretionary airfare category, which obviously people are not going to buy airfare to travel for pleasure if they don't have extra money. So that was all good. I believe Bank of America has that number estimated at 0.8% rather than the 0.5 that the street's expecting right now. So that would be excellent.
Well, it sure would. But let me tell you, I mean, we've got so much coming out of this administration. Piper Sandler, Macro Research this morning, Eddie, is writing this official government revenue forecast for the One Big Beautiful Bill estimates $98 billion in business tax cuts for fiscal year 25 and $125 billion in tax cuts for fiscal year 26 as a result of the four major CapEx boosting provisions. No wonder we're seeing all of this investment come into the United States. This goes right back to policy and President Trump's efforts to get CapEx moving once again.
That's exactly right, and that's why we say the surprise economically is going to be to the upside. This money hasn't even really gotten into the data yet, and we're really going to start to see it in the fourth quarter of this year and going into next year. And this is why we think this market has 20% more upside from here over the next 12 months. But the one thing that could kill that is if the Fed keeps monetary policy so tight and stays hard-headed in the way they're looking at things. They need to modernize the way they look at monetary policy and get on board so that way we can continue this growth, that trajectory that we're heading towards.
What do you think, Mark? Let's talk about crypto here for a moment, because Bitcoin this morning was right around an all-time high. We are looking at Bitcoin right now extend further, now at 119,176. Of course, the Securities and Exchange Commission came out with Project Crypto. We're going to talk with the SEC Chairman, Paul Atkins, coming up. But Treasury Secretary Scott Bessent told me that the government will not buy Bitcoin for its reserve. Watch what he said yesterday. Watch.
A Bitcoin strategic reserve. We're not going to be buying that, but we are going to use confiscated assets and continue to build that up. We're going to stop selling that. I believe that Bitcoin reserve at today's prices is somewhere between 15 and 20 billion.
Mark, your reaction.
And that would be, in my opinion, the reason that Bitcoin sold off yesterday, not necessarily the PPI report. Look, the fact that, the U.S. government is not going into the open market to buy Bitcoin, but they're rather going to seize it in criminal cases, I think that was a letdown for Bitcoin investors. But the bull case is still there for crypto because the administration is still behind it.
All right, we will leave it there. We got a market that is up 291 points. Let me just get your take real quick. Do you want to add to tech here? Or, Eddie, do you want to broaden out? Because tech has been leading this. Do you want to broaden out or still with that Mag 7?
We're going to start broadening out. We think we're still going to have our core holdings in tech, but we want to broaden out. And we own crypto for clients as well, too. And so we think those areas that forward-looking are going to outperform the Mag 7 next year.
Mark, your thoughts?
Well, one of my favorite stocks I've been talking with clients about recently has been Philip Morris, which has been a great performer for us. The old tobacco company, which is now
dividend payer too, right?
Which is now more focused on the nicotine packets, the ZYNs, which now make up 41% of their revenue. So big growth story there.
It's a dividend payer as well, right?
Yes, I think it's north of 4%, I believe.
Exactly. All right. Eddie, great to see you. Thanks for joining the conversation. Mark, you're with us all morning long, and we appreciate that. We'll be right back. Stay with us.